person who said, you know what, I shoulda, I coulda, I woulda. And you're retired at 70 years old, you can at least say, I tried. I took a shot. I gave a life. I was born in America and I gave it a shot and it didn't work out, but at least I gave it a shot. Don't be that person who says, I coulda, I shoulda, I woulda.
If you can get a 11-year-old child to understand your thesis, you can explain it to anyone. If a child can't understand it, it's way too complicated. Make it simpler.
Repeat these words. I'm not afraid of being poor. I'm not afraid of being old. I'm just afraid of being old and poor at the same time.
Very excited up.
Without a doubt, the number one value to Black Card has been the caliber of people.
If you have the drive and ambition to launch a fund, then there's no excuses once you join Black Card. Well, otherwise, you're going to be figuring it out. Even with Bridger's YouTube content, it's not going to, get every little piece, put together.
And the ability to just learn, like the knowledge, and it's an abundance mindset versus scarcity mindset. And I think that is such a huge thing for anybody looking to start a business.
The best thing is the quality of the people that are in the group, right?
And that God loves you, and I wish nothing but success and happiness for all you guys.
And they have coaches in place to help you with that too, and to change your perspective around things. It's very, the incentives to be in it, they far outweigh what you pay out.
So the caliber of the people here has been the biggest value for this mastermind fund. The quality of the coaches, my gosh.
The ability that being around the people here, it gives you a push and a drive to step up more.
That's how America does it, and it's worked out pretty well so far. Thank you.
Help me welcome to the stage, Steve Iceman! What's up,
Thank you all so much. This has been an incredible event. Thank you guys for coming to Fun Launch Live 2024. Y'all are amazing. We will see you next year.
Nice cars, the office views, the investor calls that finally get returned. But they don't see the climb, the uncertainty, the setbacks, the silence after the pitch. the nights filled with doubt. We did, because we were there every step of the way. We provided the tools, the structure, the strategy, but the effort, that was all him. Everyone else sees the success. We remember the climb. This isn't a guarantee. It's a glimpse at what's possible when someone takes the risk and shows up anyway.
Send them out, buddy. Woo! That's a keeper.
Am I mic'd up for this? Oh, Ed, you're looking sexy, man. Give us a smile. I'm mic'd up on the camera, so that's really nice.
What is up for lunch? Why my house look like I'm in place? Walk in the strip, she gon' make it bad. I do damage, can't stand it. Psycho bandit, like it's Marilyn Manson. Got the cash advancing, give the Sprite and enhance it. Pull the walk out the pantry.
70 years old, don't be the person who said, you know what, I shoulda, I coulda, I woulda. And you're retired at 70 years old, you can at least say, I tried. I took a shot. I gave a life. I was born in America and I gave it a shot and it didn't work out, but at least I gave it a shot. Don't be that person who says, I coulda, I shoulda, I woulda.
If you can get a 11-year-old child to understand your thesis, you can explain it to anyone. If a child can't understand it, it's way too complicated. Make it simpler.
Repeat these words. I'm not afraid of being poor. I'm not afraid of being old. I'm just afraid of being old and poor at the same time.
Very excited about it.
Without a doubt, the number one value to Black Card has been the caliber of people.
If you have the drive and ambition to launch a fund, then there's no excuses once you join Black Card. Well, otherwise you're going to be figuring it out. Even with Bridger's YouTube content, it's not going to, get every little piece, put together.
And the ability to just learn, like the knowledge, and it's an abundance mindset versus scarcity mindset. And I think that is such a huge thing for anybody looking to start a business.
The best thing is the quality of the people that are in the group, right?
And that God loves you, and I wish nothing but success and happiness for all you guys.
And they have coaches in place to help you with that too, and to change your perspective around things. The incentives to be in it they far outweigh what you pay out.
So the caliber of the people here has been the biggest value for this mastermind fund. And the quality of the coaches, my gosh.
The ability that being around the people here, it gives you a push and a drive to step up more.
That's how America does it, and it's worked out pretty well so far. Thank you.
Help me welcome to the stage, Steve Iceman!
Thank you all so much. This has been an incredible event. Thank you guys for coming to Fun Launch Live 2024. Y'all are amazing. We will see you next year.
Nice cars, the office views, the investor calls that finally get returned. But they don't see the climb, the uncertainty, the setbacks, the silence after the pitch, the nights filled with doubt. We did, because we were there every step of the way. We provided the tools, the structure, the strategy, but the effort, that was all him. Everyone else sees the success. We remember the climb. This isn't a guarantee. It's a glimpse at what's possible when someone takes the risk and shows up anyway.
Mic'd up for this? Oh, Ed, you're looking sexy, man. Give us a smile. I'm mic'd up on the camera, so that's really nice.
What is up for lunch? Why my house look like I'm in place? Walk in the strip, she gon' make it bad. I do damage, can't stand it. Psycho bandit, like it's Marilyn Manson. Got the cash advancing. You can
70 years old, don't be the person who said, you know what, I shoulda, I coulda, I woulda. And you're retired at 70 years old, you can at least say, I tried. I took a shot. I gave a life. I was born in America and I gave it a shot and it didn't work out, but at least I gave it a shot. Don't be that person who says, I coulda, I shoulda, I woulda.
If you can get a 11-year-old child to understand your thesis, you can explain it to anyone. If a child can't understand it, it's way too complicated. Make it simpler.
Repeat these words. I'm not afraid of being poor. I'm not afraid of being old. I'm just afraid of being old and poor at the same time.
Very excited about it.
Without a doubt, the number one value to Black Card has been the caliber of people.
If you have the drive and ambition to launch a fund, then there's no excuses once you join Black Card. Well, otherwise, you're going to be figuring it out. Even with Bridger's YouTube content, it's not going to, get every little piece, put together.
And the ability to just learn, like the knowledge, and it's an abundance mindset versus scarcity mindset. And I think that is such a huge thing for anybody looking to start a business.
The best thing is the quality of the people that are in the group, right?
And that God loves you, and I wish nothing but success and happiness for all you guys.
And they have coaches in place to help you with that too, and to change your perspective around things. It's very, the incentives to be in it, they far outweigh what you pay out.
So the caliber of the people here has been the biggest value for this mastermind fund. And the quality of the coaches, my gosh.
The ability that being around the people here, it gives you a push and a drive to step up more.
Nice cars, the office views, the investor calls that finally get returned. But they don't see the climb, the uncertainty, the setbacks, the silence after the pitch, the nights filled with doubt. We did, because we were there every step of the way. We provided the tools, the structure, the strategy. But the effort, that was all him. Everyone else sees the success. We remember the climb. This isn't a guarantee. It's a glimpse at what's possible when someone takes the risk and shows up anyway.
Welcome on. Good to see y'all. Good to see everybody. We today are talking about how we oversubscribed and raised in our two funds $54 million of equity in these two funds. So if you guys can see my iPad here, we'll get this queued up. Welcome on, y'all, for this live stream. Today, I specifically want to talk about two things on here. And the two things are, I'm going to zoom in here for a second. Y'all can see the bit of urgency and scarcity inside of your fund. These are the 7 principles of persuasion right here. So you can see we have authority, scarcity and urgency, commitment, social proof, reciprocity, liking, and community. These come from a lot of different books and other places that talk about how to persuade somebody. One of these old ancient marketing books all talk about the exact same things. And you can classify them different ways, but these are the things. So in every offer, and when you're running a fund, you are selling securities. You are selling an offer. How do we put in as many of these 7 principles of persuasion as possible during the close? Now, I'll back up for a second here. We're kind of zoomed in on the fund launch formula. I'm assuming you already have a good edge. You've built out an edge on either your asset class, your strategy, your team, or your structure. You've already actually found investors. You've gotten into certain rooms. You've worked your way into those rooms or bought your way into those rooms. You've actually connected with them, and now we're trying to get to the close. We're trying to work on it and get an investor across the finish line. And this is, again, how we oversubscribed and fundraised $54 million of equity. So welcome on, y'all. People on Instagram, welcome on YouTube, welcome on. Let's talk about this for a minute. Now, if you don't know who I am, I'll briefly touch on this for a second. So I'm Bridger Pennington. Our company Fund Launch just hit the Inc. 5000 for fastest growing companies in America. We're number 2652. So we help people go out and launch funds, which is, anyways, what we do, our bread and butter. We've helped now hundreds and hundreds of people launch funds. We have over 110,000 students that have taken one of our programs online all around investment fund management. And I actively manage 2 funds. So you can see my little bio here. I started out in college. I launched Blackbridge Holdings. I ran 2 funds there that did extremely well. I actually sold and exited those funds. We then built Fund Launch, and during that period as well, and Fund Launch, we have $4.7 billion of reported client AUM. We've done multiple 1,000-person events. We're a bootstrap business. Pretty fun. We have about 76 people on staff at Fund Launch to help y'all go out and build incredible investment funds. And then I currently actively manage and run 2 investment funds. You might see me on social media talking about these. So number 1 is Ugly Unicorn. This is a crypto and blockchain investment fund. We started this in 2022. Me and Dan Young, my business partner, started this. We have raised, now it's over that, but on the screen you'll see $24 million of equity in that fund. And by equity, I mean dollars in. Some funds raise $20 million of equity and they lever up with debt up to $100 million or $200 million. What I'm reporting here is just equity in the door. Now, Ugly Unicorn, we have no debt on that fund, and Fund Launch Partners has no debt either. But just to give you a sense, equity is dollars in from investors. Fund Launch Partners is a GP stakes fund. We've raised $30 million was our target. We actually have oversubscribed that fund. I think we're at 31 or 32. We've closed that fund 1. Our portfolio AUM with all of our portfolio funds is over $260 million. And we have done 10 funds so far. So what Fund Launch Partners does is invests into our favorite funds out of Fund Launch. So I do know a thing or two about funds. So a lot of these funds that I have run, or funds that we work with in Fund Launch, or funds that we've partnered with Fund Launch Partners, and typically we're writing about $1 million to $1.5 million check in these funds, all need help with capital raising. So let's talk about capital raising, at least how we have done it to create urgency and scarcity in our fund. I'll tell you a little story here for today's stream. By the way, I want to do questions at the end, so stick around to the end. I would love your questions. Type them in the chat. Say hello if you guys are on live right now. Say what's up. I'd love to hear from you. Furthermore, in this little training here, I want to share the secrets, you could call them, that we used to create urgency and scarcity in our funds so that investors were dying to get in, so that we could be the quote-unquote pretty girl at the dance that everyone wanted to dance with. Momentum and story are huge in your fund. In today's call, I want to talk through all that and help you guys with that. Sound good? And then we can answer questions on whatever. I can talk about the market, gold, Bitcoin, whatever's going on. Rate cuts might happen next week. Should be pretty fun. So welcome on, y'all. Say hello in the chat as you guys are hopping in. So let me tell you a little story. This is the story of Fund Launch Partners, okay? So Fund Launch Partners are right on my little screen here. I just shared, we're oversubscribed, I think we're at 31 million now, 31.5 million. Our target was 30 million. We are now investing into portfolio funds. It did not start that way, okay? So Fund Launch Partners
we were at fund launch running this, and I was running Ugly Unicorn, and we said, what if we started a fund to invest into the best funds coming out of fund launch? For example, last year, Fund Launch Partners, we got submitted 1,200 fund ones to review. About 100 funds a month go through our portal and submit to get funding from us. We did 10 deals last year. So we had a pipeline of 1,200 funds down to 10 deals. Fund Launch Partners, the idea at the beginning was, let's invest in these funds. And we're the fund guys. So we'll go put a fund together. Let's go launch this fund. And so we started out and we're like, hey, we're pretty good at funds. We've ran funds before. Let's go launch. Now, this was a new strategy and new team. A lot of you all that are watching this video might be like, hey, I'm smart. I've got a good team. I got a good background. That's what we thought. We went and launched, and guess what? We pushed. We did the whole fund launch formula. You can see here, we did the deal and strategy, frame and structure, verbal capital commitments. We went to legal. We then launched, okay? Fund launch is good at launching funds. We launch, and now we're pushing for our first close, okay? We're trying to set up a closing. Our first close, I believe, was right around $1.8 million. And our initial target was to go raise $50 million. So we said, we're going to do a $50 million fund. We push and push and call people up. We raised $1.8 million bucks. Now, this was in 2024. This is during, we had that election year. There's a lot of uncertainty in the market. It was I'll be frank, it was tough. It was tough to raise money. But we got to a first close, okay? We then pushed to a second close, and we're like, hey, we got some momentum, kinda. Second close, I think we got around, don't quote me, I thought it was around 4.5 million total of 50 million. And now we've spent 4 months trying to raise money. Anybody ever done this before? Like, it is brutal trying to raise money, and then no one's investing. So we are sitting here, if I remember correctly, this is March of 2024. We're like, what do we do? Now, we held a closing. We called capital. We started doing deals. So we actually did 2 deals with this money. And I think we had 1 or 2 more under LOI. But still, it's like, man, it's not working along. Now, during this period, my partners, which are incredible, Lincoln and Adam, all these other groups. Let's make sure this is still going here. There we go. So Lincoln and all these other, we had a bunch of institutions lined up. So we had about 8 to 10 institutions that were very interested in our fund. I mean, we had talked to 20 or 30 down to about, let's call it 8 that were very solid. Like, hey, we are very much considering putting money in your fund. The check size was anywhere from 5 to 20 million each. So we were like, okay, we got some verbal commitments. We got some people in the hopper. But if you've ever worked with institutional investors, and by the way, to define this, I'll zoom in on my iPad here. We have high net worth individuals, family offices, and institutions. These are the different tiers. High net worths, they write usually smaller checks, 100 grand to maybe a couple million bucks. Family offices are a big gambit. They can be from a few $1 million check to a $10 million check, even up to maybe $100 million. But that's kind of a family office realm. And some of them bleed into institutions. Some of them bleed into high net worths. And then institutions, this is more like an endowment fund. This is like the New York Fire Department pension plan. This is like an insurance company. This is like the Harvard endowment or Yale endowment. Okay, that's an institutional grade investor. So we had these institutional funds looking at us to invest. Again, their smallest check they would write. Some of them was, for example, one of them was $10 million. But then they told us, hey, we have a mandate. We can only be 10% of your fund. And so we were like, okay, so that means we have to go raise a $100 million fund for them to even consider working with us. And at the time, we're only raising 50 million. So we thought, shoot, what should we do? So we talked and oohed and awed, and we said, well, these institutions, they like us a lot. Let's raise our minimum fund, our fund size from 50 million. Let's raise it to 100 million. So we did. And we went back to these institutions. We said, hey, we're thinking of going to 100 million for sizing. Do you guys want to come in? And they said, we're interested, maybe. And they kept kicking the can, okay? And if you know anything about institutions, they always want to wait. They always want to be the last check in. Again, we're still only at $4.5 million of capital raised. So we're sitting here like, what do we do? This is now June, I think July of 2024. We then found a high net worth individual investor that really liked our fund and said, hey, I will help you capital raise. Let me come in as a partner. And so we said, okay, let's do it. So we brought him in as a partner, which there's little nuggets here that I'm going to touch on in a minute. We bring him as a partner. We give him a little bit of equity. And he's like, hey, I'll sit on your investment committee. I'm going to be an advisor and I will help introduce you to capital. We said, great. He starts bringing us capital. He's got health issues, but brings us another partner we bring in. So we brought in 2 partners, gave them equity in the firm. This one partner he brought in, this guy previously ran a pretty large fund. He was on, I think, Fund 6 or Fund 7. They managed around $6 billion in assets under management. He had just retired. Their last fund, get this, they were trying to raise $750 million. They didn't raise $750 million. They raised about $1.2 billion. And they did the majority of that full raise in about 4 weeks. Wild. So we asked him, how did you do this? And what I'm about to share with you is what he taught us. Okay. How did you go raise $750 million, oversubscribed to $1.2 billion, and how did you do it in 4 weeks? And he sat us down and he said, it's pretty simple. He goes, we have a reputation, because this was like their Fund 6, I think, Fund 5 or Fund 6. He goes, we have a reputation of being the pretty girl at the dance. Meaning all of our investors know that we are oversubscribed. When we launch a fund, people come in and it's gone. They got to be quick on it. They got to follow up and work with us. And so from previous experience, they know we always oversubscribed. And so we are the pretty girl at the dance, quote unquote. And if they want to get in, they better answer my phone call. And he goes, you got to engineer the same thing for your fund. So back to where we were, we had raised about 4.5 million. We had just increased our target raise to 100 million. And he goes, guys, you're making a huge mistake. You need to, and if you remember from the beginning, what I just shared, what was our target? 30 million. What he told us, he said, guys, I would do a much smaller fund. I would oversubscribe it and raise it quickly. It'll create a brand and a message that you guys are a fund that gets oversubscribed quickly. And so we said, okay, like you're the king. You just raised 1.2 billion. Like, let's do it. So he's a partner now with us. We slash our $100 million commitment. We go down to 30 million. We kind of said, hey, if these institutions come in, great, but most likely, and he told us, most likely institutions are not investing with you on a Fund 1. They're probably most or maybe Fund 2, but most of them are Fund 3 or Fund 4. They will watch you for 1 or 2 funds and then invest in Fund 3 or 4. So he goes, you might as well just get Fund 1 out the gate. So we kind of kissed our institutions goodbye and we said, all right, we trust you. Let's do this. We brought these 2 partners in. All of us hit the road and we said, hey, we're going to 30 million. And our next close, I think we closed, we were at, I'm getting my timeline all, here it is, 4.5 million. Our next close, we raised about 17 million. So at 17 million total. And then our next close in about, I think it was like 5-6 weeks later, we had raised up to 28 million. And then we did one more close and we oversubscribed, I think 31.5 million. Seemingly overnight. We spent, I don't know how many months banging our heads against the wall trying to raise 1.8, then 4.5. We brought in the right partners. We had the right urgency and scarcity and structure for our fund. We went to 17 to 28 to 31, oversubscribed. Seemingly, it felt like in a couple of months, like it was done. And now we are oversubscribed, deploying our fund, and we are closed. And now we have Fund 2, most likely coming out middle of next year, and we already have verbal commitments for around $20 million waiting to get into Fund 2 because they missed Fund 1. And they wanted to put more in, and we parsed them back. So let me share for the next few minutes, if it's okay with you guys, I'll share what he taught us on how we did this 17, 28, and then 31 million seemingly overnight. This is what made us, we think, pretty darn successful through this process. Sound fair? All right, let's dive in. Back to this concept of pretty girl at the dance, right? How do you engineer being the pretty girl at the dance? It's all around the story of your firm. And the story you and me want as a firm is momentum. Okay. We want a story of momentum and that people are coming in. We got lots of investors we're talking to and people are coming in. And so I actually was meeting with a Black Card member this week. If you guys don't know, Black Card's our top tier group. Black Card, we were on the call and he was doing a similar thing that we were doing. He was trying to raise 50 million or 100 million and he'd only raised like a couple million. I said, a much better story than going out and trying to raise a huge slog of 100 million is go raise 10 million. Call up everybody you know, use your network, go find all the people, and raise 10 million and oversubscribe to 11 million. And then tell everyone you're oversubscribed. And then get really good results. He was in real estate. He's like, well, I want to do a fund and do 20 deals. And I said, that's great, but you're not raising much money to do 20 deals. Do a $10 million fund and do 2 deals or 3 deals. Do really well in those. And then in 6 months, raise another fund 2 and do 4 deals and raise 15 million. And then another 6 months later, do a fund 3 that's 25 million and you guys raise, for 6 deals. The average capital raise right now, the average is around 24 months for a full fund. That is a long time for the story of your firm. For a lot of us that are untraditional, unconventional managers, I would tell you, shrink that timeline down. Shrink that timeline down like crazy and just do fewer deals in a 2-pack or a 4-pack and build momentum. That, anytime someone invests with Joe or Bridger, like, oh man, Bridger's always full. He's always got money coming in. When Bridger calls you up, you got to answer the phone. So he goes, number one, that's the story we got to create. So couple things we did. Let's get into the meat of things here. So what we did, number one, lower the raise. Have a target that you're going to hit and oversubscribe. That's what you want to tell everyone, that you are oversubscribed. Just like I told all y'all, hey, Fund Launch Partners is oversubscribed. It's a great story. Okay. Number two, something that he did with us that I had not done prior. When he met with investors, this is what he would do, is get letters of intent, LOIs. These are non-binding LOIs. So if you met with an investor, a lot of times you'll get verbal commitments. People will say, hey, I'd love to talk to you guys about your firm. Great. We're thinking about coming in. This is what we did, which was beautiful. He said, hey, set a date. So we'd pick a date. Let's call it November 15th. Hey, November 15th, we are collecting letters of intent of what you think you're going to come in sizing wise. This is just a way that we can gauge all the investors coming in because we believe we're going to be oversubscribed. And so we want to make sure we can allocate what you're looking for. Because in previous offerings, somebody wants to put in 2 million, but we're trying to get all these investors in. So we might parse you back to 1.5 or 1. So if you can, here's an LOI, submit by November 15th, the number that you think sizing wise you plan on coming in at. See that little bit of psychology that does? Gives them a little bit of commitment. It's a non-binding. They can back out. But what it does is it shows that we actually have some urgency. So what we did, LOIs, and that was a deadline, something to push towards. Hey, we're getting LOIs November 15th. I texted, I emailed everybody. LOIs came in. And we told people, hey, if you're on the fence or whatever, if you're back and forth, go and, we'll go to what size is appropriate, but you can even go a little bit higher because we might have to parse you back. LOIs come in. We say, great. We got LOIs. Now, one of two things will happen. Number one, you're not oversubscribed, and you say, yes, we can accept that we can actually pencil you down for a $750,000 commitment to the fund. We're going to make sure we are going to hold a spot for you at $750,000. Y'all following? Or you actually are oversubscribed and say, hey, I know you wanted to do 750. We got to cut you back to maybe 550. You're turning away money. It's like, wow, these guys are the pretty girl at the dance. They are turning away capital because they really are oversubscribed. Now, only do that if you actually are oversubscribed. But anyways, we got LOIs. Then we said, okay, let's just use a random number. Let's just use December 1st. December 1st, all subscription docs, sub-docs are due. So you say, Kate, now you have an LOI. I'm going to send you over a data room and subscription documents. Great. All those docs are due in 2 weeks. And we will be holding our first capital call and we're going to call down 5% of the fund on that date, December 1st. So there's a little bit of commitment. So if you put in $1 million commitment, we're going to be calling 50 grand is due December 1st, and we'll send you wire instructions. Make sure to confirm over the phone. So see how right, today's what, October 22nd or 3rd, whatever it is, 23rd. We've now engineered a date to push for an LOI date. Then, they don't know it yet, but then there's going to be a December 1st deployment date that we're getting a 5% capital call, and it's trickling them into the fund. Y'all following? This is what our mentor told us to do, and we said, fine, we'll do it. The first time we did this, we tripled our fund size because we had raised 4.5 million. We went to 17 million. We then picked another date about 2 months later. We raised another about 11 million on that next one. And we did one more date and we rounded out and closed the fund. We actually turned away capital and we oversubscribed the fund at roughly $31.5 million. Pretty cool way to do it. LOIs, pushing for subdocs, calling down 5%, sending updates, and building a story around your firm. If I come back to, so with that, that was my backstory. Forget the technical stuff here. If I go to these 7 principles of persuasion, these are not from me, these are from, you can read Influence, you can read Expert Secrets, you can read Launch by Jeff Walker, any of these great marketers, PhDs, whatever, they all come back to these core principles of persuasion on anything. If you notice, what were some of the things that were in that story I just shared with you? Well, a little bit of scarcity and urgency, right? There was a deadline, and also there was a sizing issue. A lot of times people like us, we don't buy things unless it's going to go away or unless other people are buying it as well, which would be social proof down below. And if an investor allows you, hey, could we, it's a family office that joins, hey, could we tell other people that your family office is investing? Now, sometimes they'll say yes, sometimes they'll say no. If they say yes, oh my gosh, the Rothschild family office just put money in. It's a little bit of social proof. Oh, Jeff Bezos family office, they just put money with us. If they allow you to do that, great social proof that builds, and then again, scarcity and urgency with that, huge. Okay? Now, a few other things, again, you don't have to have all of these. Even if you have a couple of these in, you're feeling pretty good. If you noticed, the way we even presented and went about deadlines, the authority on the subject, they want to make sure you're absolute experts on the topic that you are selling. Commitment, if you noticed, we got micro commitments, non-binding letters of intent. They were just one-page documents. We'd send it out to them. Just write down what you're thinking, what you're sizing, and we'll see if we can accept that. It gets a small commitment. People generally follow through with commitments. That's why the story of boiling the frog, right? These little teeny micro commitments will lead to bigger commitments. We'll come back. I have a fun story I'll tell you in a second on that. Social proof. Who else is coming in? Reciprocity. If I give you a gift, you are way more likely to give me a gift back. So how can you give them a gift? Something me and my partner Dan Young is incredible at this. Every time we do a call, and he just does it naturally. He says, oh man, how can we help your business? And he asks about their business. Oh my gosh, I have a friend I can introduce you to. I think might be a customer for you. Or hey, you have a problem over there. Oh, I can help you connect you to my guy. He'll help you figure out that problem. Reciprocity is huge. Liking, generally people do business with people they like, right? They tell jokes, they're funny, just good people to be around. And then finally, community. We often at times like to be a part of a community. You can do this as an investor community with your fund. Let me share a crazy story actually for a second on this one, commitment. Have y'all heard of this? I'm going to share it on my screen here. We'll look it up. It's a TV show that came out called, it was on Netflix. We'll see if it'll pull up. It's called The Push, I believe. Okay, so this TV show right here is crazy. Do you guys see this? If you can, Friday night, Saturday night, whoever you're with, go rent this show. Okay, this is a crazy, crazy show. In 2018, they had a social experiment. They wanted to see in a single night if they could get someone, you can put me full screen if you want, if they could get somebody to commit murder in a single night with social engineering. So that's the premise of this TV show. And I think it's just one episode. It was like a docuseries of Could we get somebody to commit murder in one night through social engineering around a bunch of things? So they went out the beginning of the show, and maybe I'll spoil it for you. It's still worth watching. So they set up these people. I don't know if it's unethical or whatever. The people do not know they're part of this experiment. Maybe they do, maybe they don't. But they did it with 4 different individuals. I think of the 4, 3 of them commit murder by the end of the night. Now, they unknowingly commit murder. It's called the push because they at the end, they engineer this whole night to the very end. And what they do is they do these small micro commitments. They catch them in a lie. And they catch them in a bigger lie, and they catch them in a bigger lie, and they catch them in a bigger lie. And at the end, the one person that knows that they had lied all this way is standing on the edge of the building, like on a phone call. And they're like, you should just go push him off the building because you're going to go to jail. And so 3 out of the 4 times, the person runs up and pushes this person off of the building. Now, there are nets below. The person doesn't know it. Everyone around them is actors. And they're all socially engineering this person at a fancy dinner to commit murder by the end of the night. And they push them off, and then what happens is the person hits the net, and then they come out and they say, hey, this is a big fake, you didn't commit murder, and the people are sobbing. I mean, they are emotionally wrecked. I'm sure there was a couple lawsuits after this movie came out. It's crazy, okay? And so I tell my salespeople and whoever, I'm like, if they can convince someone to commit murder by the end of the night, you can convince someone to buy your used car or product or whatever. Now, we're not taking away agency from people. Still, people have their free will, but there are certain things that you can engineer into somebody to do this. Now, this show is crazy. Go look at it. But by small little commitments, it got this person riled up to the point where they're going to push someone off a building and commit murder. Back to in a fun sense to kind of bring it back home, small micro commitments are huge on both sides. Getting an LOI signed, getting the cross-finish is massive. Same thing on your end. They're going to, hey, Bridger, can you send me over those docs? Oh, yeah, I'll send them over tonight. Make sure you send them over tonight. Follow through on exactly what you say you're going to do. Okay, commitments go both ways, and it's huge on building trust and confidence before someone comes and invests in your firm. Is this making sense? Type in the chat, by the way, if you have any questions. So this is how we went out and went from a meager 1.8 million. We couldn't really raise much. And we're the fund people. We run funds all the time. We're trying but it was a new vehicle. It was a new team. A lot of people didn't understand what we were doing. And then we brought in a partner. We used this new technique and went to 17, 28, and 31 for Fund Launch Partners. Now, what I just described will work well if you're running a venture capital fund, if you're running a private equity fund, if you're running a real estate fund. It does not work so well if you're running a hedge fund. So let's talk about that for a second. A hedge fund is typically trading public securities, so stocks, bonds, options, crypto. My fund, Ugly Unicorn, is a hedge fund. It would be defined as a hedge fund, Ugly Unicorn. We are in cryptocurrency. We've raised roughly $24 million of equity from investors. How our fund works, there isn't a ton of natural urgency and scarcity. Somebody can join our fund at the end of every calendar month. Because, I'll zoom up here, we are an open-ended vehicle. So right here, this is how our fund kind of works. If you guys see my screen. Capital, we just strike a NAV, a net asset value, at the end of every calendar month. Money can flow into the fund. There's a minimum 1-year lockup period, and then people can exit the fund if they want. So you kind of choose when you want to enter or exit the fund. And we raise money pretty much indefinitely. This is an open-ended fund. It runs essentially forever. There are also close-ended funds. That's more like Fund Launch Partners, where you only have, we raise capital, we close it at $30 million, and then we deploy, we do value-adding growth, we then sell and dispose of these things, and then we close the fund. And then we launch Fund 2, and Fund 2's right here, and then we launch Fund 3, and Fund 3's right here. So let's talk about these open-ended vehicles for a second. So how do you create urgency and scarcity if someone can invest, well, next month, or the month after that, or the month after that? Like what do you do? So this is what we did. We have to create it in different ways. Where did I write it here? So right now, I think we did 2 pitches this week. About every week, I'm doing 2 to 3 pitches on Ugly Unicorn. I've done that for about 3 years. We raise on average anywhere from a couple of $100,000 to a couple $1 million per month with Ugly Unicorn. So why, like right now, why should someone invest in ugly unicorn at the end of November? Why not wait till the end of December? Why not wait till January 1st or February 1st? So a couple things that we do. Number one, we have to create urgency and scarcity through market timing. And to be frank, sometimes it's not a good time to enter the market. Because how it works is when someone joins Ugly Unicorn, they come in at the price of where the fund is at. So if the fund is down, it's a good price. It's like a stock. But if the fund's high, it's kind of a bad time to come in. So I'll be pretty honest with them. I'm like, hey, right now is, we've had a good month. It's a little bit high. You can come in now if you want, if you think, or you can wait till it comes down, but up to you. Other times, like this month, for example, in crypto's crashed a lot in October. We've told people, hey, I don't know, but I believe it's a very good time to come into the fund. Right now, gold just hit all-time highs, just capped over $30 trillion. Now, the last few days, we've seen a big sell-off in gold. I'll put gold here. Bitcoin is about $2 trillion. We've seen a rotation from gold to Bitcoin over the last few days. If just 10% of gold comes into Bitcoin, that would over double the amount of Bitcoin out there. So gold could just sell off a little bit and come into Bitcoin, and people have called Bitcoin digital gold, and you can compare the two. Gold right now has 2% inflation per year. They find about 2% of gold per year, and they add it to the global reserve. Gold is hard to transfer. It's very heavy. It's dense. You have to have armed guards if you're going to have gold bullion. Right now, gold bullion trades at a 15% premium to just spot gold. 15% premium to actually get gold coins and gold bars. Furthermore, back in the tariff war back in April, many people were trying to get their gold out of London. It was a 60 to 90 day waiting period to get their physical gold out of the vaults in London back to New York because there were so many withdrawals, which also makes you question, like, is it actually there, or can they pontificate gold? Because people buy GLD, it's a ticker online that is supposed to go buy gold, but may or may not buy gold. We don't know. Furthermore, people in China have reported they had gold bars. They cracked them open. Inside was a dense metal, like a tungsten or iron or whatever the metal was. And it was plated in gold, but it wasn't actually gold to the core. So you have fake gold problems. Bitcoin, on the other hand, is on a blockchain. Has never been duplicated, at least so far. There's only 21 million of them. There's no inflation. So a lot of smart investors are saying, hey, I want to hold gold and Bitcoin for the same reasons. I want to hedge against global currencies. Ray Dalio said, he recommends about 50, a split between gold and Bitcoin. Right now, $30 trillion is in gold, $2 trillion is in Bitcoin. It's kind of an imbalance, you would say. And then so I went on a little tangent there. Sorry, squirrel tangent. But back to market timing. So right now, crypto is down, gold's high. We think there's going to be a rotation over the next few months. At the end of this 4-year cycle, it could be a good time to enter the market. And investors can decide what they want. But we'd say, hey, next deployment date is October 31st. You can enter the fund. So that's a little bit how we create some urgency in the fund. Now, Bridger, how do you create, I'll change colors here. How do you create scarcity in the fund? Well, somewhat hard. Our first fund was a 3C1 fund. Per SEC rules, we only have 99 investor spots. And so that gave us it's built-in scarcity from the SEC. Your fund, if you do a 3C1, can only have 99 spots. So this is like last year, we had filled up 75 of these spots. And so we would tell people, hey, we've filled up 75 of the 99 available. These spots are probably going to be gone here in the near future. Would you like a spot? And then as they filled up, as it got to 80 or as it got to 90, we really started hitting this is about to fill up and built some scarcity. And then what happened was we hit the 99 and we launched a parallel fund, which is a 3C7 fund that can raise 1,999 investors, but can only have qualified purchasers in it. A qualified purchaser is someone who has a $5 million net worth or above per the SEC. So anyways, that gave us a little bit of urgency and scarcity in a hedge fund. But again, I think market timing is going to be your best bet. So to review, LOIs, bringing on good partners that can help you capital raise is huge. Getting these micro commitments, building urgency and scarcity, lowering your raise amount, raising less dollars faster. Builds a much better story than raising lots of dollars over 5 years. Like no one cares because momentum dies. But if you can oversubscribe your fund in 6 months or 8 months, much better story and queues you up for fund 2 or fund 3 or fund 4. All right. What questions y'all have? Let's pull up the chat here. I want to make sure we hit some of these. So type in any questions. I can stay on live for a few more minutes and make sure we hit some of these. All right, we got Instagram here and we got YouTube. So I can't see those. Is there any way you can make them bigger for me? My eyes are getting bag. Enjoy the share. This also, your audience will love you forevermore no matter what. Oh, that's awesome. You can come on, come on YouTube. If you're on Instagram, YouTube has I'm actually sharing my screen on YouTube here. Maybe just read them out to me if there's a good question. And if not, no worries, I can hit a few more here. What happened to the podcast? So we actually have launched Investment Fund Secrets Season 2. We've been posting that one, and to be frank, we've been posting a lot to YouTube and not copying it over to the podcast. That's our fault. I know Brigham. I've told Brigham this. I'm like, we got to post. We've been focusing on YouTube, but we should be also posting those to the podcast. So we will get back on it, Ryan. Yeah. Our Fund 2, so Ugly Unicorn Fund 2. So now we're still raising Fund 1 and Fund 2. And you can put me full screen if you want. Ugly Unicorn Fund 1 and Fund 2 they're both live. One's for accredited investors, one's for qualified purchasers. And then Fund Launch Partners, we've already oversubscribed Fund 1. We plan to open up Fund 2 next year, and we're already dropping seeds for people like, hey, when it opens up, we oversubscribed our last fund. We're probably going to oversubscribe this fund. We have a few larger checks that are looking to come in. So we're already trying to drop those seeds. But again, we want to make sure that we are, you could say, we've deployed capital. We've already done, we've done about 10 deals so far. We just LOI'd and we inked another one yesterday. So we're at 11 deals. We're trying to do about 20 to 25 deals total in Fund 1. So we want to be at, 18 to 20 deals done before we, start deploying in Fund 2. Zach, is a 3C1 the same as a 506B and only allows 99 investors? Good question. If you can share my iPad. So I just shared about this, different fund types. So they're both, you have to have both. Yeah, so they're all here. So if you can see my screen, if you're on Instagram, come over to YouTube if you can, Bridger Pennington on YouTube. But you'll see Reg D fund type. So my fund is it's a Reg D let me make this right. 506, so 506, Reg D 506C or 506B. My two funds are Reg D's 506Cs. And then underneath Reg D 506B or C, then you select a 3C1, 3C5, or 3C7 fund, or the most common fund types. So my fund was a Reg D 506C and then 3C1 fund. So that makes sense on there. So you have both. You can do a Reg D 506B, 3C1 fund. That's how that works. Yeah, good question. These are SEC fund types. 99% of private capital in the world is raised through one of these vehicles. A Reg D 506B would be the most common. Next up would be a 506C because these allow you to raise unlimited amounts of capital. And you can raise them as a private placement. You're not raising them as a public company or a public offering. These are private offerings. And you're doing them typically only to accredited investors or above. In a 506B, you can take 35 non-accrediteds. But again, most of the time you're taking from accredited investors or above. And you have certain rules here, but this makes sure that you're not like a mutual fund. You're not like a ETF. You're not like a public company, and allows a lot less regulation. And this is why Blackstone uses these, KKR, Sequoia. I mean, you name the fund, they almost all fall under a Reg D 506B or 506C fund type. Yep. Yeah, great questions. Any other ones on there? No? Fine. So a couple of things I'll share. In 2 weeks from today, we are doing one of our biggest live streams of the year. So if you're on live today, it'll be at the exact same time 2 weeks from today. We're bringing on 3 fund managers that are going to talk about how they're adjusting their investment portfolios going into 2026. It should be pretty fun. Furthermore, we're going to give away 2 full fund entity legal setups. We're going to give away about $2,500 of prizes on the call. My goal is we have about $1 million of credits to Black Card we give away. We're going to do this full. It's a big deal. We're running ads for it. It should be pretty fun. We do this once a year. We drop all of our Black Friday deals and discounts. It should be a very, very fun time. You do not want to miss. And by the way, you have to be live to win the giveaways and win all the cool stuff and get the best discounts for Black Friday. Everyone that shows up live will also get a free gift live. I can't tell you what it is, but it's worth more than a pencil and less than a Tesla. Okay, that's the parameters. 2 weeks from today is the full 3 fund managers coming on. We're dropping all of our Black Friday discounts, so make sure to save the date and register. It's free to attend. And by the way, if you refer the grand prize winner of the legal fund setup, if you refer them, you also win it as well. So we're giving away 2 full fund entity legal setups. So make sure to look out for that. We'll be on Zoom and YouTube. We'll stream it out to other platforms. It's pretty fun. Furthermore, the merch store is live as well. That's live on here. Well, this content, you can go watch it again on YouTube. We'll do more of these live streams in the future, talking about urgency and scarcity in your fund, how to raise it. That's how we went out and raised over $54 million of equity for our 2 funds. All right, y'all are amazing. Please, if you can, like this video to push it out to more people on the replay and things like that. And we'll see you on the follow-up lives. Feeling all right? Okay, we'll end it now. Thank you all. See you guys later. Bye-bye. Okay. Sweet. I still feel like I'm low. I'm not like sized right.
This like mouth is so heavy, it keeps like dipping on me. You're on my 3rd. You sure?
It feels like I just have way too much headspace. Like I want to be in the upper 3rd. Like you're putting the line right on my eyes. Can't see it there, but